Hello everyone, I'm Shekhar from Momentum Lab. Now in this video, I'll show you how to plot an RRG graph using Python. RRG plots are really helpful for both investors as well as traders in identifying stocks which are in strength and also avoid stocks which are showing weakness. There's been a lot of research and a lot of commentary on RRG plots. You can search by Julius D. Campanar, who's the creator of RRG plots. He has given a lot of talks on how to use this tool and how to get best insights in trading and investing using this tool. So you can search by Julius D. Campanar. In fact, he has given a very recent session with in Strike Money, where Strike Money is having this tool on their platform. It's a paid tool on their platform. So it's going to create commentary on how to use this tool and what kind of insights that you can generate. So it is better to hear from the creator himself on the insights than me giving more commentary on that. So I'll limit this video on showing how do we plot this tool on Python and some basics of RRG plot of how do you spot some early movers, how to spot weak stocks, etc. And third, I also show you how do you use this code to help in your trading decisions. Now, I've written this code in such a fashion that even the non-programmers can use this code. So let me first show you or demonstrate to you how an RRG plot looks like and how can you use this code. So I've written two pieces of code. Let me share my screen first. So I'll be sharing this code in GitHub, and you can access this code. And someone who is not proficient or is not a programmer, they can. I'll share the Google Colab link also, and they can just use it by clicking on this run button, and the code will run automatically, and you'll get the output that you want. Now, let me show you an animation of how an RRG plot would look like in real time. So let me take a small example of RVNL as a stock and show how does this RRG plot look like in real time. It takes some time to load the data of the stock as well as the benchmark and compute the relative strength ratio as well as relative strength momentum to plot the values. Yeah. So you can see that on a two-dimensional way or two-dimensional format, this is how the RVNL plot looks like. You cannot see this yellow colored lines because the background is overpowering this small yellow colored lines that are visible here, but you will be able to see when I show it here. Now, to visualize an RRG plot, you can use this code and see in real time how is this moving over a period of time. So RVNL is in a leading quadrant for some time, and it is staying in this quadrant and making a cyclical chakkars that you can see here. Like it is outperforming and it is continuing to outperform. And it is in the leading quadrant. We can see the same in TradingView also, just to recap or to reconfirm whether it is indeed true or not. So let me quickly open TradingView chart and see how RVNL is doing. So let's plot RVNL. Over a weekly time frame, we see that it is an uptrend. Now, please note that RRG plots are always used with respect to a benchmark. Now, I'm using Nifty as a benchmark. So let's plot a ratio chart. I'm just dividing by Nifty. So you see that RVNL has started to outperform. Initially, it was flat, meaning it was doing the same as what Nifty was doing. It stayed in that same range in this when you see this ratio chart. And post October 2022, it started to outperform. The relative strength is being set to be in an uptrend. Now, this in a visual format, if you have to see, is this. That once relative strength, once RVNL started to come into the leading quadrant, it stayed there. And it continued to stay there for a longer period of time. Even now, it is still in a continuous uptrend. Let's look another stock just to understand how does it look. Let's change it to ITC. Don't worry about all the details of the code. I'll explain in a moment. So for now, just see how the how visually you can interpret in an RRG plot. So I'm running the code for ITC. I think I'll have to put it in 1.25x when I upload this video. Yeah. So you see that this is ITC. Initially, it was not in leading quadrant. It was somewhere here or lagging or improving. It stayed there for quite a bit of time and recently entered into leading quadrant. Now let's look at its trajectory. You see that initially it was in leading quadrant, but after that, most of its time it spent in lagging and improving especially, and then recently came to leading quadrant. So it was not overperforming or performing better than the benchmark. It was underperforming. And over the last 2 weeks, it has now moved into a leading quadrant. Let's compare that quickly with the ratio chart. First, let's see the ITC on a weekly time frame. So we can see that ITC has woken out from its recent all-time high, and you see that it has done pretty well in the recent couple of weeks. It's a weekly time frame. Let me use the candles to show the improvement. In the last 3 weeks, or in fact 4 or 5 weeks, it has moved with greater force from its recent bottoms. And you can see that in the last couple of weeks, ITC has made a quick shift from improving quadrant to leading quadrant, meaning it has outperformed the benchmark also. So let's quickly check that by plotting a ratio chart of ITC. So you can see that this is the ratio chart, and it has bucked the downward trend with respect to Nifty and started to improve, and has now changed its trajectory. Whether it continues its stance or not, we'll have to see. But all of those indicators, one, its own individual chart, second, the RRG or this ratio chart, all point towards that direction, that this is changing its trend. Maybe you can also add a couple of more parameters, like you can also see the sector, FMCG, whether it has also changed its trend or not. And maybe if you want, you can also add a couple of fundamental factors like valuation, etc., and take a more nuanced stance. This is not a recommendation. This is just a way to analyze different stocks using RRG plot. So that's how this piece of code helps you understand visually what has been the trajectory of a stock with respect to its benchmark in the case of Nifty. Now, let's say if you want to see a couple of stocks or a group of stocks and then compare it with benchmark, or maybe you want to see a couple of or a group of sectors and you want to compare it with the benchmark, maybe Nifty 50 or Nifty 500, and then take a call. You can do that. For that, we have another piece of code that will help you to do that. Now, what I'm going to show right now is how this code will help you in plotting an RRG graph. So first, what you need to do is you will need to enter a benchmark for which you want to compare or plot this RRG graph. So let's say I'm using Nifty 50. The code for that is NSCI according to Yahoo Finance, because we'll take the tickers according to the Yahoo Finance convention. So I'm using NSCI, and you have to input as the benchmark. Now, let's say next you want to enter the tickers for which you want to plot the RRG graph. You have to give them by a comma separated. So if you want to use sectors, then you can use sectors. Again, please check with Yahoo Finance the exact symbols of those tickers. Let's say if you want to use CNX FMCG, which is nothing but the FMCG sector, then for that it is, I think, had FMCG, I believe. So you can use that. And if you want to use individual stocks also, you can use them. For example, this is the symbol for CNX FMCG. So what I'm going to do is I'll add a couple of sectors: CNX FMCG, IT, maybe pharma, and we'll also add metal. And then once you have given the inputs of what all sectors or stocks that you want to plot the RRG graph, the next thing that you want to do is you want to enter the period over which you want to fetch this data. Now, ideally, you want to fetch as long as possible so that the look back period is sufficiently covered in this entire period. So we'll take last 2 years of data, input 2 years, and then you enter the window size for the calculation. So the window size is, now since we have, let me show what I mean by window size. So let's take this example of a ratio chart or relative strength chart of ITC. Now, if I just plot the latest value and I don't show the values before it, then you'll never understand what has happened. Whether was it coming from a downtrend, or whether it was coming from an uptrend, or whether it was a side trend, you'll never know. If you just look one singular latest point, only if you see its trajectory of its historical data points, then you can come up to a conclusion whether the relative strength, the trend, was it improving, declining, or plateaued. So, and hence we'll need a look back period for us to calculate the relative strength relative strength trend or relative strength ratio. So what we'll use, let's say last 26 weeks. So note that all these data points are measured in terms of weeks. So 26 weeks is nothing but 6 months of data or half year. The next thing that we need to input is the tail length. Tail length is nothing but this. Assume that this is a three-dimensional plot, two-dimensional in fact, because we are taking our relative strength ratio and relative strength momentum. But if you want to add time also as a dimension, what we're going to do is we'll be using these plots or these coordinates of this particular stock ITC in the historical context, and then we'll be able to see its trajectory. So this way, this trajectory we will be able to notice and come to a conclusion how has it traversed for a period of time. Now, what length do you want to see of its historical context is called as tail length. If you want to see its last 5 times 5 weeks time span, or you want to see last 12 weeks time span, so that will become the tail length. So for example, I'm just inputting it as 5, and then it will do its part and throw out the output. Now we see that FMCG and IT are in the leading quadrant, whereas metals is in the improving quadrant. You also notice that FMCG has made great strides in moving from improving quadrant to leading quadrant. So we'll do a lot of interpretation of these charts and also see how do we get some insights on RRG plot. But this, in a nutshell, this is how this code can be used to plot your own RRG graphs. If you want, you can change from sectors to individual stocks also. Let me show how does that happen. So you can again go back. So you can change these benchmark also. For example, let's use FMCG as a benchmark, because we just saw, right, that FMCG is a leading sector. Let's see which stocks among FMCG are performing really well. So let me add ITC.NS. This is the Yahoo Finance ticker. And there is no add for ITC.NS. And then we'll use Marico.NS, and then we'll use Hindustan Unilever. Let me check what is the code for Hindustan Unilever. NILBER. Okay. And then we'll pull out last 2 years data, and we'll see over last 12 weeks. We'll take 5 as tail length. So within FMCG sector, we've seen that FMCG sector is leading, and within this sector, we see 3 stocks. We've taken 3 stocks. There are many more stocks that you can take. Out of these 3, ITC is outperforming or leading, even the FMCG sector. Marico has moved from leading to improving, and Unilever has moved from leading to lagging sector, leading to lagging quadrant. Now, this way, you can do a top-down approach. When you say top-down, you first focus on the assets, first of all, which assets are doing. Maybe you can have equities, commodities, bonds, real estate, REITs, etc. And then within assets, you can see which asset is outperforming, and then you can double down on that asset. For example, if it's a Nifty is performing. With the Nifty, again, you can take a look at different sectors plotting on the RRG. Then you can sieve through which is in which quadrant, and again, zero down on a couple of sectors. And within those sectors, again, you can see which stocks are performing well within those sectors. And that's how you can quickly come to a conclusion of what sectors to focus on, which are having good probability. And you couple it with the charts, seeing which stocks are having good setup, then you have a even higher probability of getting into good trades. This is not a recipe for success, but there's a way where we can eliminate the process of identifying stocks. Any trader or investor has 4 tasks to do. 1, where to invest. 2nd, when to enter, when to exit. 3rd, and how much to invest. So these 4 questions need to be answered by any discretionary trader or investor. The first part of this question, that is where to invest, can be simplified by this approach. There can be other inputs that also you can take. Maybe if you're in fundamental investor, you can take valuations. You can see RRG plots. You can also see their own individual charts and couple it with multiple other factors. You can also see momentum, their volatility, whatever. The more data points that converge and give you a better perspective or a better understanding on any given sector. And if the risk reward is also in your favorable, then you are at least putting your best step forward in identifying the stock, and the remaining stocks like position sizing or when to enter, when to exit, those are separately answered. These may not be answered by RRG plot of when to enter or when to exit, but at least they'll narrow down on where to focus on. Now that's the high level concept of RRG plots. Now let's see how this code can be helpful to you and how can you tweak some parts of this code. Maybe if you want to change a little bit, I'll walk you through this code. So first we are importing a couple of libraries, pandas for data manipulation, NumPy for numerical operations, and Yahoo Finance for fetching the data. So if you want, you can use HTML for displaying as an animation. That is mostly as a cosmetic or beautification purpose. You may not want to use it, but someone who wants to visualize, they can definitely use that. And Matplotlib PyPlot for plotting the graphs. And next, what we're doing is we are writing down our get status function. This will help us position the ticker based on its quadrants. So you have seen, right? There are 4 different quadrants: leading, weakening, lagging, and improving. Now we'll give the coordinates if based on x comma y. If x is greater than 100 and y greater than 100, then it is a leading quadrant. And for remaining other quadrants, based on the xy position, we identify where are they lying in. And we'll give a color code so that it is easy to visualize. And we'll also give the same color for the ticker falling in that quadrant. So if it is green in the leading quadrant and red for lagging quadrant, and so on and so forth. Now there are 2 parts within this code. One is the meat where the logic resides, and the second part of the code is essentially the cosmetic changes or beautification to ensure that we are able to visualize clearly these RRG plots. Now I've tried my maximum best to ensure that these RRG plots look similar to what the original RRG plots are. If you want, you can use there are a couple of tools. I think there's only tool in India that I am aware of is by Strike. But if someone wants to do it on their own, they can use this code. I'll be sharing it in this description. You can take a look at it. Okay, so the next thing that we will do is we will define or we'll initialize a RRG plotter class. Now what it does, we'll initialize this with benchmark, ticker, and other parameters. There are totally 5 parameters that we're going to enter. One, as we said, RRG plot centers around a particular benchmark. The benchmark will be the midpoint. So we need to input what is a benchmark with which we are seeing the rest of the universe of stocks. So we have to input the benchmark, and then we'll also have to input the rest of the stocks or the stocks that we want to plot in the RRG. Third, we'll need to give the data that we want to fetch from for what duration. And fourth, we'll need to tell the look back period over which we will want to compare the relative strength of any stock with respect to the benchmark. And 5, we'll have to mention the tail length of that for that particular ticker so that we can visualize its trajectory. Now, once these 5 are done, then what we're going to do is we're going to call a couple of other methods. One, to load the data. That essentially does the job of data manipulation and data fetching. Second, calculate the RRG values. This is where the logic resides. I'll spend more of my time in this part. And third is on creating the plot. How do you visualize this part? So let's go step by step. The next part is loading the data. As I mentioned, we'll take both benchmark and tickers data using Yahoo Finance. The unit of time frame is 1 week. You can change based on if you want to take daily or monthly part of it here. If you are someone who's okay with 1 week or 1 week as the unit of time frame, then you can straight away run this code and do it yourself. We'll be taking adjusted closing price than the closing price. Now, what we'll do is we'll then calculate RRG. Now, to calculate RRG, there are 4 important metrics. The first metric is relative strength. Relative strength, as you have seen, it is nothing but this value. When you divide a particular stock or sector with respect to its benchmark, you get a number, right? That number is the relative strength. Relative strength in itself is a meaningless number. Only if it is having the historical data, then only it makes sense. Now, what we'll do, we'll calculate relative strength ratio. Relative strength ratio, what we do is we take based on the look back period that we give. For example, I gave 12-week look back period. For the last 12 weeks, we'll calculate the average of all such relative strength data points. We'll calculate the mean, we'll calculate the standard deviation, and then we will calculate the latest relative strength minus the mean of last 12 weeks relative strength divided by the standard deviation of last 12 weeks. Essentially, we're getting a z-score of this relative strength. So that number will fall anywhere between plus or minus 4, for example, plus or minus 4 sigma. Then we'll add 100 to it. Let me just come back here. So we're first going to calculate the relative strength. This is nothing but the ticker data divided by the benchmark multiplied by 100. Then we are doing 100 plus the z-score. That will give you the RSR, or relative strength ratio. Now, why are we adding 100? This is because you cannot add 100 also. You can straight away take this value. But what will happen is when you plot this graph, right, the values will be so far, so that in one single pane, the values will be far off and you cannot visualize all the stocks together. The objective of adding 100 is so that we get the midpoint as 100, 100, and all the values are centered around 100, 100. Now, by adding 100 to its 100 to a relative strength ratio, we are zooming in and getting to center all the values around 100, or else they'll be spread too far. So that's what we do here. Now we have got relative strength ratio on the x-axis. So if you have a number which is less than 100, it means the stock or sector is underperforming during the given look back period. If it is in the right side of the quadrant, it means the stock or sector is outperforming during the given look back period. Look back period or the relative strength ratio will help us to identify the quantum of outperformance during the look back period. That is in a way a lagging indicator, because it has taken a couple of weeks of data and said that, okay, over a period of time, the stock has either underperformed, overperformed, or stayed flat. But that itself is not sufficient. We also need to see, apart from historical point of view, the quantum of change that a stock has undergone. We also need to see the pace, the current pace. So when you combine historical data with the recent data, and then only you'll be able to get a plot like a plot like this. So the x-axis will tell you the quantum of shift that a stock has moved from the benchmark over a period of time. But what is it doing now? Whether it is improving its relative strength ratio, or whether it is changing its trajectory or staying flat, that now is answered by the momentum. Now, when you get history and present, that is what the RRG plot tells us. Well, obviously, you can't predict the future. So these two are the best indicators of what is happening with the stock. Now, how do you calculate momentum? We do what we call as a percentage change or rate of change of the relative strength ratio with just one data point, prior data point, and calculate what we call as RSR ROC. So the current relative strength ratio we subtract it from the last data point, last week's relative strength ratio, and get the percentage change for the last week. If you see a positive number or a positive percentage number, it means over the last 1 week, the relative strength ratio has improved, meaning it was improving its relative strength ratio from last week. This, we will normalize it again. We'll normalize it the same way that we did earlier with the relative strength ratio, and get what we call as RSM. Now we have two normalized values, one RSR and RSM. Now these two are the fundamental building blocks of these of this RRG. The need for normalizing is that it will first, because all the different plots that you do right between different stocks with the benchmark, these numbers are meaningless if you're comparing one ratio chart with another ratio chart. It is not apple to apple comparison. If you have to compare with one to other, then we'll have to normalize. That's the entire process that we have done in this calculate RRG method. Now for RSM, notice that we are doing 101 plus instead of 100 plus, because naturally any stock which is in an uptrend or moving up or moving downward, they do not go in a single linear fashion. They take their small pauses and then move forward. So if you are accounting even for the small pauses as change in momentum, as momentum is changing and it is declining, if you had 100 plus instead of 101, then what happens is that it will unnecessarily show changes happening from one quadrant to another quadrant, and that will unnecessarily muddle the entire plot. So we are giving a leeway, saying if there's 1 sigma deviation from its mean in terms of momentum, it's fine. Let it be in the positive quadrant. Only if it is showing more than 1 sigma deviation, then you say that it is weakening. So if a plot, if a stock, even if it, let's say, or a sector, even if it, let's say, is in the leading quadrant near this line, it means that its relative strength over a period of time has improved. The momentum also has been picking up, even though there's a small minor downward trend in the latest few weeks. Still, we will be discarding it. We'll be okay with that. We'll be living with that, and we'll still ensure that it stays or is plotted in the positive quadrant. Only when the momentum changes rapidly and it is more than 1 sigma deviation, then we say that we come down to weakening quadrant. Again, these can be changed. You can play around with these numbers to come up with your own interpretation, but this is the standard in which Julius D. Campanar follows his relative rotation graph methodology. And then from here onwards, the rest of the code is about mostly how do we beautify. Now, for every ticker, what we do is we do a for loop where each XY coordinate is taken into consideration, plotted, and measured and shown in the RRG graph based on the tail length. Now, if you enter somewhere a stock name incorrectly, or you give a wrong input anywhere, in terms of naming convention, right? The code takes care automatically. You don't have to worry about it. It says that the ticker is not correct, or maybe there is not sufficient data inside, and it doesn't stop the code altogether. If there are some tickers which are having correct nomenclature, it goes ahead and prints out the code perfectly. And this animation part of code is used to visualize this part. This visualization is helpful for someone who's looking the RRG plot for fresh. For someone who has seen a couple of hundreds of RRG plots, then there's no point of it. You can omit that part. RRG plots, when you see, they usually do a clockwise movement. They outperform, they weaken, underperform, and again rise and outperform. So that's the usual trajectory that any stock or sector in general is seen. But if you're already aware how they move, then no need to use this part of code. Again, as a caution, it doesn't mean that all the stocks will always move in the cyclical or clockwise fashion. As we have seen earlier, the RBNL, it can always stay in the leading quadrant, or it can always go to weakening and again come back to leading. So the direction might be clockwise, but it need not go to all of these 4 quadrants all the time. They can stay within those smaller circles and make it be in those quadrants itself. For someone who's not comfortable changing within this code of inputting the different benchmarks or tickers, we've used get user input function. That's how you're able to see or input the values here rather than changing it directly in the code. So these are the main functions of the code, and you'll be able to see this plot. I hope this helps in understanding and coming up with better insights. As a rule of thumb, I will just show a couple of pointers of how to spot some good stocks or sectors using the RRG plot. This I've learned from Julius T. Campanar's videos. There are many such videos by him on YouTube. In fact, he has done a recent video, as I mentioned, in Strike Money. You can take a look at that and get directly from the horse mouth than me talking about it. But I'm going to crystallize my 3 learnings that I have seen over a period of time. One is that the stocks or sectors which are moving or showing in the northeast direction are the ones which are gaining strength, whether they be in the lagging quadrant, leading quadrant, or the improving quadrant. Whether if they are showing towards this direction in the weakening, they're showing the latest week is pointing towards this direction, means there is an improvement. If it is already in the leading sector and it's showing in this fashion, it is great. Second, if the tail length is big, it means there is greater relative strength and greater momentum behind it, a stronger push. If the tail length is small, then it means it is going contraction. If the tail length is big, you'll also see that these stocks coming up in the momentum radars. If the tail length is small, these are consolidating in a tight range. If the tail length is small and they're in the leading sector, sometimes you might miss them on the momentum radar, because momentum might say that it is not having momentum, but over a period of time, they're outperforming the benchmark and they're staying above the benchmark and trying to keep the momentum also above the benchmark. So sometimes these are hidden. So this is it about RRG plot. I'll be sharing this GitHub files in the YouTube description. You will find a link tree. So that link tree shows all the resources that we have prepared from Momentum Lab, and that you can click on GitHub and get access to both these codes, RRG Animate, which will show you how to animate, or how to visually see the stock moving across the RRG quadrants. And then there is RRG Momentum Lab that will be the code where you can use it for plotting RRG graphs. That's it about this video. There are a couple of alternatives also in India. Maybe you can use Strike Money that costs around 625 rupees per month, I believe. And in international space, there are a couple of other ones like Bloomberg, Optima, who are offering charts, school charts, trade. I think they're also offering RRG plots. But in India, only Strike Money is offering. That's it from